following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. And I apologize for missing yesterday. I had some business to attend to in Raleigh. Had to drive up to the big city of Raleigh, North Carolina. Man, that place is exploding. If you want to see a nice city sometime, just get on an airplane or get in the family truckster and roll on up to Raleigh. It is a cool place, to say the least. House prices are going straight up. I sold my house there in one of them in, 2009? And I think that house is worth significantly more now, which makes me sick. But that's not your problem. Let's take a look at the euro really, really quick. I still like the way this is acting, guys. I'm a big fan of being short this thing, and playing around with it below 109 is kind of the name of the game for me. You've got a big issue it's got to contend with here on our long-term weekly over here. 109.90, let's just call it 110. It's not a bad place to pick a battle also for you kind of short-term traders. That may be a little bit of a fence to lean on there. And by the way, on the scanner side, we've done some more work on it. I'm trying to get these everything wrapped up. I'm going to get everything wrapped up over the holidays here. And you guys will get a new build, and you'll also get these awesome charts that are going in here on bleeding on all these historicals now. So I know you're going to be happy with it. Thanks for hanging in there. Just want to say that. You guys ever watch History Channel? Does anybody ever else? I love that. And how about Ancient Aliens as a corollary to what I just asked? I love that statement on there. Scholars believe. If scholars believe, it must be true. So we're going to use that phrase a lot in trading now. Scholars believe that the euro will go down. Let's take a look at the Australian dollar. Scholars believe the Australian dollar will go up. Anyway, got a little bit of a resistance area, just like the euro on the Australian dollar. But again, I'm passing on shorts on the Australian dollar when it gets up into these POCs on the weekly. We don't talk about that a lot, but this is something where I think we're just going to roll down the other side of this hill on our long term. Remember that POC, the blue line, is the point of control, and it's the most voluminous print area in the profile that's been outputted on the Aussie dollar, which was September 2015. So this is a long profile. It's been in force for a while. If you go back in time, it's one of the longer ones. So, what does this mean in general? Albert, we're going to, I'm a big fan of that show. We're going to talk about that in a little bit. Ancient Aliens, as it applies to what we're talking about on the charts, by the way. But this is one, the longer a profile stays in force, the more relevance it has. All right. So remember, there's another little thing, profiles that have recently expired. It's like if you look at the calculation for an exponential moving average, the most recent closes, or however they're calculating the moving average, sometimes people do them differently, but the most recent closes take more of a weighted prevalence in the average itself. So it's kind of like these profiles. It's the ones that have recently expired kind of carry the weight as opposed to the ones back here, if you're looking at my chart now. So so this is the Australian dollar again. Sorry about that. So US dollar looks like it's on support again to me. The Australian dollar is kind of on the launching pad. It's going to be a little bit of a tug of a war here, but I'm still looking for ultimately 74.39, 74.40, and even higher on this. with stops on the long term below 71.69. Same story. I sound like a broken record. I think this is one of the best trades out there. I don't see a lot of risk on this one, but remember to put your stops in on the long term. FIVE, please. All right, got a request from the den. We're going to continue to talk about Ancient Aliens as it's appropriate. Hope you guys don't mind. They've kind of gone off the deep end. I will admit that lately. Run out of things to exclaim that scholars believe, so they're kind of making up things that scholars might believe now. Okay, scholars believe that FIVE is kind of broken trend down. Actually, in all seriousness, guys, 3070 is going to be your long-term support right now, Paul, from the den. That breakout now. This is really cool because in the scanner, you know, if you're loading up your usual suspects, if you're loading up your usual suspects in the scanner, and the way you do that is if you get this thing, which I think you'll find I hate to sound like a sales guy, but it's got something for everyone in here. It's got short-term trader connotations that are extremely helpful, and then it's got some long-term, put some things on your radar screen, custom filters, things like that. And again, you guys are going to get a new build with all the stuff that I promised I would do over the holidays. I'm still quantifying this block of time before New Year's Eve is the holiday, so I am working feverishly to get all this stuff in, as well as some of the programmers that are coming back. But as you look at this and you look at breakouts, you know, one of the you can look through this. What does a breakout actually mean? So in English text, this is kind of the definition here. If you had FIV on your custom lists, which you can go in here. Let me see. How do we do this? Add list. All right. So I can go in here, test, whatever, and I can put FIVE. That's not in our scanner. Daggone it. Sorry about that. Oh, wait. What is F? Hold on. 5 below. I'm sorry. I thought it was my fault, guys. I thought it was F5 networks. I'm sorry. So anyway, this is not in our scanner. We've got, by the way, all the S&P 500 and NASDAQ 100. We've got some custom symbols that are in here, and that can be accessed actually by going in here and where's our custom? Other. So if I take out the S&P 500 and I add other, these are going to be some of the other symbols that people have asked for actually to be in here. So if you've got some requests and you want to see BABA, Aero Growth International, 3 Days Corp. I mean, some people have sent in requests for symbols to be added, and we have to add those on the server. So, Albert, who asked for that? Paul, if you want some symbols in here, I mean, try not to throw us 1,000. We'll add them, and we can put them in this category other. I just want to point that out. And can I belabor a point in general? Yes, I can. Thanks for bearing with me. So what I was going to say is the breakout above profiles here, 3070, if this stock was in the scanner, would have showed out in that breakout custom sort. So right now, you know, we're looking, what do we do with this thing? So, you know, the market's been obviously rattling around here. And the good news is I looked at this daily before we started talking about the weekly. You got really massive support around that weekly unfair high now, which is 3070 that we just talked about, and then our daily unfair lows. So we've had a new profile appear that's locked in as of yesterday, and any pullbacks into this 3070, 3084, that general DMZ neighborhood, in my opinion, you got to be willing to kind of step in and take some shots on this. And now, where do you say uncle if you're long and you bought the original breakout? Now, if you watch this show, I'm a big fan of breakout, come back and retest, you know, former resistance, now support. So I'm looking to initially place relatively stingy stops below 3070. That's kind of based on your appetite for risk. I kind of use a general formula of, what my appetite for risk is relative to the height of the box. So I'll take 3070 minus 2789, multiply it times the percentage. Let's just say 15%, 20, and that's the noise area I will give that particular instrument below that inflection point. So as we look at the scanner, if I look at Apple, and I don't know if we've got Apple loaded here. Daggone it, not yet. It's all being loaded, guys. As we look at Apple, I'm going to go back to my chart here. It says 26 arrow down, 3 arrow up. So we're kind of just languishing in balanced areas in Apple, but Apple's got a massive, just incredibly big, almost never seen before, 25% of the height of the box on the long term. This is incredibly big. And this is predicting a lot of, by the way, when something like this happens, I mean, when we break below profiles, it's okay to be short, not okay to be long. That's the general rule. And then when we have a massive wide profile appearing, we've got to pay attention, not exclusively, but very, very poignantly to that POC, that blue line. And that's in your scanner. And that's kind of the top of the big hill, Mount Everest. That's what this one is. So let's take a look at Apple. There's that 112.48, 112, 112.50. We talked about these big numbers. And when we start using them as support resistance, and then we get some momentum on either side, Paul, that's great. I'm glad you're asking for those symbols to be in the scanner, but can you email them to me, and then I'll just be able to put them into the tech. Logan at tasprofessional.com. We'll get them in the hopper. They'll get in there. These are easy to add. 104.29. I mean, Tom, I've been listening to Tom O'Brien, and I'm a big fan of what he's saying about Apple. This thing's more than likely going to go lower. We had a little bit of a trading opportunity getting down into 104.29. If that was hit, we kind of got into that neighborhood last week. We got 105.57 on these wide profiles. You're not going to get to the tick, but as this thing, POC was used as support, resistance. It's been kind of the fence, the top of the hill. Can I get to the top of the hill? Can I roll over? Can I gain some momentum on the other side, and vice versa? This outlier here, this standard deviation away from the mean of our distribution, not our POC, but the mean of our distribution. This is a big, big number. I don't like, for Apple guys who are trying to, get long here, I don't like how it's consolidating down here against this unfair low. We're going to continue to talk about Apple and talk about a lot of other things when we come back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're finishing up with Apple. 104 bottom line, 104.29 is gotta hold. You know, if you're going to put a gun in my head and force me to buy something right now, it's not going to be Apple. That's the first thing I want to say. So 104.29, any breakdowns below there, I'm actually looking. There's been a trading kind of bounce situation in the neighborhood of 104.29 that's been offered. You know, we almost bounced, what is it, 109 last week? What was that? 109 to the tick. So again, you don't want to see this consolidation around these inflection points like this. And if you're long, this is not numero uno on your get happy list for Apple. So something I'd probably stay away from. I know we've pulled back significantly from the 130s, but again, I think you got better longs out there. And one of the cool things is the scanner is going to put them right on your radar screen if you start doing some of these sorts and just finding. I've got the S&Ps up here. I just want to find strong situations on both time frames, or I want to find situations like this that I can sort and basically find stocks that are trading above profiles, and I can also sort relative to my arrows and time frames that are still in the balanced area or above the profiles on our. These are kind of interesting here. Ones that have just broken out the past day and still above profiles. So there's a lot of different things you can look at in here, and I beckon you to just review some of the concepts that we've got on here. And again, just a horde of videos are coming out on this particular scanner I promised over the holidays. So, all right. 4 out of 5 doctors recommend to not be long Apple right now. That's a good one too. Scholars believe that Apple may not be a good long. How you like that? All right, so we've hit a couple of currencies. I want to throw this one on the board before we go any farther. This is one that's kind of been near and dear to my heart on the Canadian dollar, and I just completely love the way this thing is still acting relative to the U.S. dollar. When we talk about the U.S. dollar, this is a devaluation thing on the Canadian dollar as the Canadian dollar price chart goes higher. So the dollar situation, this is our big number. We've got to stay above 98. I still like buying support there. And if we think that the dollar's in a supportive situation here, that means that the Canadian dollar has got a great chance to continue to get devalued more. And as we talked about, we talked about waiting. I want to show you this. We talked about waiting patiently for support on the Canadian dollar, 138.12, and that was hit basically a couple of days ago. What is this? 138.06. So nice little situation here. Still like this trade. A lot of people are trying to short it, which I think is not a great idea right now. And obviously a big correlation to crude oil. So I'm going to go into my futures chart here, which is not what we're looking at right now. Let me go to my correct chart. Okay, here we go. Let's go to crude oil, wherever it's at. Right here, as they say down in North Carolina. Here we go. So, again, we had a decent little run on crude oil, but we talked about, these areas 3762. You got to keep trying to turn the rents the same way. And I wasn't, a huge fan of saying, "Oh God, crude oil's breaking out," and let's back the truck up and get long. The long-term trend, guys, on this thing, you got to be willing to turn the rents the same way. Stay with the trend. So here's the weekly. A new weekly profile has appeared. We talked about taking off some weight on the short side and not being short anymore, but we haven't been a huge fan of being long. But right now on crude oil, Al, you got an inflection point you got to pay attention to here, 36.82. Now, what does this mean to the Canadian dollar with the relevance of crude oil to the Canadian dollar? And Larry actually pointed that out the other day. He talked about it, and it's definitely a true statement. Historically, traditionally, however you want to say it, there's a lot of relevance in the price of crude oil relative to the Canadian dollar. So you've got some resistance at 37.62. You got some support down here on the weekly. I think this is more than likely right now a no trade. So what does that mean? That means you're going to have to be willing to sell breakdowns, in my opinion, below 36.82 now. Now, again, we had some targets that were met on this thing on the short side. That's what that yellow bar is about, and that's what that yellow peel back means in the scanner. But we're going to talk a little bit more about this and move on to bluer skies when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. There's so much to talk about today. God, I want to talk about a lot of stuff. We only got 30 minutes left. We were finishing up with crude oil. So my take on that is to still sell breakdowns on the long term if we can. Daggone it, Al. I'm sorry. I keep showing the taskbar on this server. So what happens on this is I hide the taskbar, and then my tech guys who are always in these servers, there's a lot going on other than the e-signal in this server, and they come in and get upset with me. And scholars believe that they will eventually kill me someday because I do that. That's what they believe. All right. So we had a couple of things that we needed to cover here. Some from the den. Obviously, we have to talk about the S&Ps. We have to talk about the S&Ps. All right, so that 2057 area, we talked about that being resistance the other day, and we talked about it being a little bit of a scary trade because all the breaths were positive. But you got trading opportunities around some of these inflection points, whether we're breath positive or breath negative. These are areas of they must be taken into consideration. Now you got to move back above this 2057 after you kind of compressed up in here. We got as low, and I'm biting my tongue this morning, got as low as 2035. So, what a 20 S&P pullback off of there. And again, you're trading against the long-term trend up on situations like that relative to the breadth. So, and I have my ETF grid up here. So let me go back to my index grid. Did I ever say that I like this scanner a lot? There's the only short-term index in the seller on the 6 hour. So as we go into the daily, obviously the S&P. I mean, I've had a little bit of a rough time trading the S&Ps lately with some of the volatility and trying to trade long-term inflection points. I got nicked up a little bit, but that's trading. You guys probably know that by now. You got to be willing to cut your losses short, let your profits ride. That's so easy to say. It's difficult to do sometimes. But remember, being right half the time is actually way ahead of the game, believe it or not. You just got to put your risk rewards in perspective. Risk $1, try to make $3. Risk $1, try to make. So, as we look at the breadth situation, you know, we've crossed back over positive that day. As you can tell, this is our price action chart down below, just extremely all over the place and hadn't had a lot of direction. So, you know, we talked about the middle ground also going up, and that middle ground at 60% the other day. It's barely coming off. We still got, as far as most of the stocks in the S&P are still in a balanced state. It's the only time I'll start feeling really, really good about one side or the other is for this area to start dissipating and start converting over. And this is our daily. This is our weekly. All right. So again, not a huge amount of direction here when it comes to all the stocks sitting on the launching pad, ready to go north here in this situation. You do have a close. You do have a close. No, you do not have a close. This is the morning, and it's not the end of the day. This is not a close. 2057, you got price action sitting above here. I'm not a big fan of just buying breakouts right now on this. I'd like to see some more concerted effort within the breadth and start getting some conversions over. And we're going to go over this in these educational videos that I'm doing over the holidays here. But, you know, I'm not just tickled pink to start buying this thing up here. So even though we've got a breakout this morning, it's almost like a pass situation to me. I'd like to see a daily close up there and then maybe come back and try to retest 2057. So I'm kind of ignoring this right now. And that's the way I'm looking at the S&Ps. I know a lot of, you know, some of the guys on TFNN are kind of net wanting the S&Ps or net positive on the S&Ps. Some of them are net negative on the S&Ps. And if you look at that tug of war, even within some of the hosts on TFNN, that's almost an indicator in itself to me. So a lot of non-directional situations going on now. End of the year, you've got, historically speaking, you've got a statistic that, you know, the markets generally kind of rise up towards the end of the year in this last week, but the volume's going to be super light. We're probably going to have some herky-jerky action. If you're a fan of that, please get in there and swing the bat. But I don't really see a lot of leverage here one way or the other. All right. The as Tom calls it, the ever-ready bond market. You know, S&Ps are gradually edging up. You're coming back down into support here on the 10-year. This is the 126 area. Again, I'm looking at this as support. I like these bonds and notes, believe it or not, still from the long side on the intermediate. We did break down on the long term here and go back and retest it. But again, I'm not a huge. This is our weekly. I'm not a huge fan of shorting these bonds or notes. Okay, so let me review here what's going on. All right. Anything you guys want me to look at, just throw it in there. Hope you guys are not gaining weight over the holidays like I am, by the way. We're going to hit gold really quick. I can resist everything except temptation. That's a fact. All right. And there's a lot of good food around here on the holidays. Gold. We're going to, I mean, this is a broken record. I mean, the thing that I'm looking at the daily here. Here's the weekly. This is 1060. I'm just waiting for a weekly close below 1060 and then being able to just whack this thing from the short side. We haven't had that weekly close yet. We've been kind of churning down here at the bottom of this profile, not showing a lot of interest on the long side. On the long side. By anyone. And to me, this consolidation down here is just a setup for this to possibly implode. But I want to see a weekly close. I want to see the confirmation on gold. And I hate to say this, but This is kind of a sit on the sideline situation also. We got to look at natural gas here. John in Philadelphia, if you're looking, the worm has turned a little bit on this one, to say the least. So we had come up into the resistance 1975. We closed above. I don't know if I would call this a retest, but again, that was a clear indication that it was okay to be long, not okay to be short. I'm not trading this. I got smacked pretty hard in natural gas one time, and I've kind of stayed away from it ever since. But the new weekly profile has appeared. It's very wide, and that was, this was etched in stone as this bar started, by the way. So I'm going to go into the scanner. Where are we at? Futures. Okay, here we go. I'm going to go into the scanner, and I'm going to look at where are we at? Okay. This is the February contract. All right. What the heck is going on here? You guys don't have this version. I think I've got a little hiccup here on natural gas. Let's see here. 2.3, let me see. 2.3. Yeah, we've got a little issue with natural gas right now in the scanner because we're loading those historicals. You know what? Do I have the wrong contract here? Let me just check. Guys, we're going to come back to natural gas. After the break, I'll look at it. I just want to verify something with our tech guys on this one. That's odd. Okay, that's okay. That may be what the issue is. John from Philadelphia. We'll come back to natural gas. All right, so let's take a look at something else we wanted to look at. XLY. I've been following this pretty closely, and before we look at that, I want to look at Amazon. Jeff Bezos, the smartest guy in the world, become a zillionaire without actually making money with this company for a long time. Okay, so we had a little bit of a trading opportunity there coming off 684, but man, this action, it's almost like you've seen this movie before with this product. And it's hard to go against it. I mean, you do have something to lean on here, 684, but again, breakouts above there, you're going to have a lot of shorts running to cover this thing again. And the XOI is obviously, this has quite a bit of relevance to the XOI, but it's one of the stocks. And again, 684 is going to be the big number. I don't like how this is acting now. I'm not a big fan of being short this right now. I was kind of a big fan of trying to pick some battles around 684, and that worked out quite well. 684 down into, what was that? 635. That's not a bad couple of points pullback there, but the XOI going back to it. If Amazon can pull back, I'm a big fan of this imploding. We talked about, and Amazon doesn't look exactly like it's in a pullback mode as we just spoke of, but this is our long-term weekly. We have a massively big profile here. We've explored it to the tick before on the XOI down into 7184, and we're rattling around up top here, but on a relative strength scale, again, with any help from Amazon, this could really, really pull back, in my opinion. You've got some things in your favor here. New highs, lower highs in Navigator. This is kind of a long-term view on this. And I'd rather be short this than long. We've got breakout potential that I got chopped up on the other day below 77.67, but I'm willing to play that game again on this, especially if Amazon can stay below 684. So that's the situation in the XOI. Did we look at silver? This is the March contract. Again, it's very similar to gold, even it's a relatively weaker instrument on a metal scale. You got a new profile on the daily sitting here, but I mean, this is kind of one to stay away from and just kind of monitor gold, in my opinion, if gold can start doing weekly closes below 1060. IDNA. Let me look at that one. Somebody threw that out in the den. IDNA. That's not coming up as a symbol, Paul. Could you check that? IDNA. Okay. Scholars believe that that's not a real symbol. I've already used that, so I'm going to stop. Okay, let me get back to business here. We're going to take a look at Disney. A lot of people that are trading stock underlying instruments of S&P are looking at this right now. Again, Tom's been pointing. He's been very right on this. It's something wrong with this stock. A lot of these not bad fundamental news that has come out. Their numbers are not exactly terrible, and really on par. And this stock has acted on a relative strength scale a lot relatively weaker than the S&Ps in general, and on not bad news continued to trend down. So what's going on now? So this is our daily. Let me see what's going on pre-market with this 107.94. So as we have a new profile attempting to appear on the daily, you're going to get this in the scanner. I'm going to go back to my dashboard here, and I'm going to go down to Disney really quick. And here's the daily profiles. As you can see, that new profile attempting to appear, that means that if you've been short, you need to consider, all right, and this started happening yesterday. So we're going to have a new profile for sure output today. And that will be new inflection points to lean on the short side. So you're going to have to monitor that on Disney. I'm a big fan that this stock is broken down and it's to be sold for a while relative to resistance points that are offered by the profiles. All right. We're going to take a look at another stock that I had on our radar screen this morning. Actually, we're going to look at some let's go into the scanner and let's take a look quickly, because I got so many things I wanted to talk about. Let's take a look at the and I'm going to go on my short-term scale here. A lot of these ETFs have just gone positive on a profile, net profile basis on every time frame. We're going to take a look at some energy stocks, and obviously, crude oil kind of depressed everybody with, hey, we're going to rally, and then it was over. So a lot of these stocks may have held up, actually, or not a lot of these stocks. A few of these stocks may have held up, and we're going to take a look at some of these ones that have held up relative to profiles on our scanner when we come back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Thanks for coming back. Okay, so natural gas, that was my mistake earlier. I was looking at the wrong contract. eSignal, we're in a roll situation. eSignal still had that. Our tech has actually rolled this to February, and here's the situation on natural gas. I've already screwed it up again. Let me get to, okay, there we go. So there's a Feb contract. So the scanner was showing top here on natural gas. It's correct. There's the Feb contract. I don't know how I missed February instead of January. So we're showing top one here, obviously green across the board. We've been in just an incredible move up here. But, you know, we showed a close above this profile in the February contract on the scanner. That's why it's showing top one green flashing. Let's put my greasy hands on my glasses. But we're within the noise area. So if you're long, you've got to be looking at this. We're trading 22.32 this morning, 2.321, 2.321. Sounds like a countdown. You've got to be willing to take some off the table here. This is a major, major inflection point, and we've rallied up to the top of the profile in our long-term trend down. So that's my take on the Feb natural gas contract. You're looking at something that you have to pay attention to. These inflection points are very, very powerful. Okay. All right. So we were taking a look at the XLE stocks. I'm going to go to the XLE really, really quick, and then we're going to throw some darts on the board here. Got a new profile that should output today. at the end of the week here. Not exactly looking very rosy. We had just a flash in the pan bounce off that crude oil rally, but how do you kind of find some things that are showing themselves? So we're going to go back into the ETF section of our scanner. We're going to hit the XLE here, right there, the only one red on the board on the 4-hour. And there are some stocks that are showing some anomalies here relative to crude oil pulling back, and you want to pay attention to these. We looked at, what was the one the other day? Southwestern Energy Corp, SWN. That was when we talked about, it was really, really showing some signs of a pop here. It obviously did. So let's take a relook at that. SWN. And if you kind of caught this before it got out of the barn, that's great. Here's the long-term weekly. I mean, this stock has just gotten hammered. But 654, we had a green bar. We actually traveled above the entire profile. That's why it went from red to green instead of red to yellow to green. So here's the scanner situation. It's showing the profile inflection point. It's showing a 2 there. This is the second week we've had a close above profiles. So we've come back and retested this week already, if you can see that. And we should have been showing top 2 there on the scanner. 654, come back and retest. This is one of the stocks showing a little bit of anomaly relative to crude oil. Here's the daily. There's that initial breakout that started happening. So what do you do with this now? In my opinion, you've got to be willing just to stay long. There's not a lot of indications we're slowing down here. We're trading 7 pre-market, actually, and stops below 654 on a long-term basis. You could still catch a really decent ride on this particular instrument. I mean, this is one. This was what was this? God, let's go back in time here. My goodness, this was like a $50 stock last year. So again, it doesn't have to stay in business. Anything can go out of business, but you got a decent risk reward here, and I like how this stock's acting. You got some other good stocks on the XLE to pay attention to here. God, I wish we had more time on it. All right, guys, stay tuned for Larry. We'll pick it up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.